Hello guys, welcome to Traders Therapy Session. I'm your host KRO. In today's video guys, I'll be walking you through my day. I happen to be in a trade, by the way, but let's just focus on the analysis and the breakdowns on how I came about with that trades and that analysis and the bias, everything like that. So if it's your first time here guys, please make sure that you subscribe and you follow the previous videos, because the analysis, everything that you see here is the build up of everything that we've been analyzing throughout. So you make yourself a favor at the moment and go back to the videos after watching this or before, but I'm just alerting you because sometimes you might feel like we are losing you, but the answers that you need might be answered on the previous videos. And by the way, we are on this channel, we're talking about the current market and the situation using ICT style of trading. Without wasting any time guys, let's just get into the video and let me share with you what I saw. Starting off the weekly time frame. What is it that we have on a weekly time frame? Remember that we had all-time highs. Go back to the videos guys and see how did we came about here. We have all-time highs that we took out, and then below we had this fair value gap and that fair value gap. Our focal point now will be this fair value gap. From last week's video you can see how we did, and plus if you haven't watched the NFP trade, please make sure that you watch that NFP trade. I have the analysis. Unfortunately, I didn't get in during NFP, but I got in post NFP. So see me analyze, giving you the move of NFP, how it's supposed to happen. Guys, that like there's no any transparency that you might need than this, guys. There's no any transparency. See before NFP, see the analysis, what I was looking at during NFP, what I was expecting. I was not even jumping into a trade because, like guys, this thing is booked by the algorithm, and I just happen to have a light of it as well, and courtesy to ICT for that. So guys, we were here. You can see now my fair value gap is now having a consequent encouragement, and we closed below this on Friday. Now we opened here. What will be on your guess here? Obviously you would want, if this is a consequent encouragement, what comes in mind, this is a sensitive area. So obviously even if we can fully close this, but you want to get the reaction off of this, hence the market closed here. So that is the first narrative. You want to get the reaction off of this, you are here, so everything else will be based off of this. This is weekly, you just have to take this. You are at the sensitive area of a weekly time frame. Let's go to our daily time frame. I'm coming in with that weekly fair value gap and the consequent encouragement, but let's look what we have on a daily. I am repeating this again. Look how we jumped to break this. So to me, logic says this area was hard to reach, hence we even needed a gap just to go and take those all-time highs. So let's just focus. What do we see on the daily? We have a gap, no trading range here. So my eyes are focused here. On Friday, Thursday and Friday, we closed that gap, as you can see. So gap high, gap low, but we are at what? Weekly consequent encouragement. And we just closed the gap. So let's see what the market will give us on the lower time frame going here. Clearly guys, before even trying to go any further, some of you might be asking, why am I doing this top down analysis and the likes? I am trying to get the bias, but if you did not get the bias at this point, know that you still have a work to do. Before I announce the bias, if you did not get this bias before I announced them, know that clearly there's a lot of work for you to do. So this is a sensitive area. everything else that we are taking a trade based off the bounce of this area. So obviously we want to bounce high to where we have this area, we have the highs, we have everything else. What do we have here? We have the high and the higher high. Look at this candle low right here. Look at this candles right here. You will see the willingness of price going low. This is a displacement. We have a breaker. This candle's high, this candle's low. The retest of that candle, that's your breaker. And then what is it? What is the main characteristics of a breaker? The breaker with high probability is the breaker with a fair value gap within it, or inside. You find inside the breaker, you find the fair value gap. Here you have a fair value gap. We just don't want to cluster the chart, but these are the areas that we are focusing on. So where is the best area that you can turn from if you are willing to go there? Can you turn from here? You'd have a doubt because you still want to close this gap. You'd also have doubts because we are inside the fair value gap, but the consequent encouragement is still here. After closing this and after seeing the willingness of the candles bodies in the consequent encouragement, that at least give you more confidence that the price might bounce off of this area going high. Let's see what we have right now. Now we're going to take that logic. So guys, my bias confession, my bias will be, I'll look at the price going high. Even though we might go low, but my price for short-term buyers, I'll look for price to go high. Everything else that I'll be doing here, I will focus my buyers. What are the buyers, if you may ask? What are the buyers? You know, if there are two people, there's a conflict between two people, and you are the mediator, siding with a person A than the B, is because that you have certain buyers why you want to side with this person. So why do I want to side with buys than sells? So even though I will see the sells, but I will more focus on the buy side. I guess guys, I made that one clear. So this is for my buys. If I go to 1 hour time frame, look at what we have right now. My buyers are to buy, even though I have sells. So what do I have as buy? Oh, look, let's look at this before. We have NFP taking out the liquidity right here, driving high. Guys, I've traded this NFP. I've shown you this NFP. I've tape read it. I was tape reading this, and I was part of the participators who took place on this move. Am I proud of that? Hell yes. So, and I knew the market was coming here. And one of the things that you must watch that video is because my target was this area, but you will see me moving out here. And after me having to move out, go out of the market, see the market dropping. What makes me do that, guys? There's no more evidence that you can be given. Immediately, if you are bought at this moment, please subscribe, like the video, comment, and say, I'm in. You are the part of modifier. So guys, your bias, that's psychologically, that's what you need to hold strong as you go to other time frames, especially lower time frames. So you have this, you have the 1 hour fair value gap right here. This fair value gap, look at the reasons why I like the candle closes inside the fair value gap, even though the candles might close outside and reach the target, but this is the reason why I like the candles closes inside the fair value gaps. See this, we have the low, we have the high, the market is pulling down, we might have an OTE, we have a fair value gap at the discounted area, we see price pushing into this area right here. You want to buy here, you buy. Where is your stop loss gonna be? Your stop loss will be here or will be here. But because of the candle close, look at the candle close, the market tipping your hand, say I'm about to do something here. So if the close was within and you still bought here, I would still be fine if that was me. But once I start to see these things, this is the reason why you see on my videos I'm still in the market, but you see me coming out even earlier. But if you can check the track record, whenever I come out, the market doesn't even go to the TP that I've set. The market just move a little bit higher and drops. So you will see me, these are the things, signatures that I'm looking at when I'm inside the trade. So as you see, expecting the consolidation, and if you watch the previous video on NFP, I have mentioned the consolidation coming in here, and the price was like this. This is what I was talking about. Then from this, what do we have? Look at this week right here of NFP. If you take your Fibonacci, you're going to have the sensitive areas, of which is 25%, 50%, and your 75%. So this missed 25% with I think maybe one tick or so. So this reacted off of 25%. So if you were waiting to catch it at 25%, you could have missed it with that. Just a little bit of a tick. I will just have to show you when we get to the charts. Then after that, the price moved higher. This is where we are. Remember, our bias is to go high. What do we have? We have an internal liquidity, because this is an hourly, and I have mentioned that when you come to the hourly time frame, you treat this as your higher time frame. We have this buy side, this buy side, this. Eventually, we might be going to the higher time frames liquidity there. But one thing that you need to remember, go to your calendar. If you go to your calendar, you will see. Okay, we'll go to the calendar day. There's no news day. So if there's no news day, what type of a structure do we get in the market? We get this buy side liquidity being respected, supported by price, and price pull low before we go to New York session. Our silver bullet, we trade off of the order block right there, dropping low. This is the kind of a structure that we see mainly in no news days. So I'm not going to disregard that. Although I want to see the price moving here, this might not be the day. Price might be wanting to go low. So what does this say to me? I only catch the low hanging fruits until I see something here. So let's go to the lower time frame. If I go high or going low, high against the low, what is it that I have? I have this low as a liquidity. This one we took out. I have this low. So going high, I have this one. Let me just point out the ones that are just appearing out there. At least this highs. I have liquidity here that I might go for. And if I go after this one, I might come for this if this fair value gap is not the barrier for market to drop down. So we might go for this one. Then we have this one. Then if this fair value gap we're going to violate it, we'll eventually go for the long-term targets. I would say this is a long-term target, your weekly target. If you catch this target here, you wait and see how the price is going to do as it gets to the fair value gap. Then you might want to catch the market as it comes back down. Then that's it for the week. So now that I have this, then as you can see, going to London 5 minutes time frame, that is that fair value gap, that is that low. As you can see here, me sensing the price balance ranged, but seeing this being a drop Judah swing, I was expecting the price at least here to give me the at least from here to give me respecting this. You can see this order block right here to give me at least the to at least give me the rejection and give me the OTE entry, at least somewhere around here, and move high to attack this. But as I see price breaking above this right here, so what am I expecting? I'm expecting price might test here, but I'm going to also filter that. You will see me as I trade, as I go for the entries. So the price is moving here. You see me going in. And guys, this is a practice account from Top Step. I have a combined challenge with them that I'm taking, of which I'm not going to show you the combined side, monetary side of it. I will only maybe show you the trades from the combined side, but I will always show you this because there's no money that I'm gaining, there's no money that I'm losing. So if you copy this, it means that you're doing this at your own risk. I didn't offer anyone any financial advice. I'm talking about the market. Where does the market go? If I place trades that involves money in them, that will be private, that will be for my own doing. And if I do public, I'm not encouraging anyone to do that. So what is it that I'm having at this point? Entering here, but look at my stop loss. I'm filtering here, but I was concerned about this. I will show you as the market, as we move on, so that I'm accommodating what? I'm accommodating this fair value gap as well, so the market could eventually come here. But this doesn't mean, and if you are a true ICT follower, you would know ICT preaches this, and I saw his NFP as well, and the trade that I missed is the one that he got, by the way. I saw his NFP trade, he got that trade, and he moved out somewhere halfway. Then after he moved out, that's where I got my trade. So it's part and parcel, and I'm not copying him. By the time he was doing that video, I was not aware of, and because I was recording my own videos at that moment, the very same day of trading. But the analysis, you can even see, guys, the correlation between myself and him, what is expected. So let's get to the point. If you are a true follower of ICT, you would see him preaching. Even if you want the market to come here, that doesn't mean you have to take the order. That doesn't mean that your trade has to come here. Your TP needs to be hit for you to be successful. Guys, this is so much to share. There are so much fractals here, there are so much micros here that you can profit off. So do not feel appetized by the risk to reward ratios as they look so appetizing. Doesn't mean that you have to come here. Let me make that one clear. So as you can see, the market now dropped. Now we go this right here. You see, I have only fixed rate. I'm trying to push their rule. It's 50k account, so I have the fixed rate here of 5 lot, of which if you read their terms and conditions, and guys, please, this I'm also helping those ones who might be embarking here and might be seeing challenges. It doesn't matter whether you're trading micro or mini, 5 contract size or 5 lot in mini and 5 lot in micro, they are the same. So do yourself a favor. If you have 50k account, don't do mistakes that I did. But I didn't have a knowledge about the micros. That's the thing. I was trading synthetic indices before coming to futures. So I was trading the minis, and it was hard for me to even absorb this kind of a trades, because the stop loss would be like $500, and they want you not to risk $1,000 per day. They want you not to risk $2,000 per account. So you would see this for me would be 4 trades stroke, and you wouldn't emotionally, I wasn't feeling well, and it's the reason why it even took me time to even do this challenge. And I even did what? I even reset this account, as I saw myself, I was on negative, and instead of repaying the subscription, it was better for me to leave this one go and reset it. So we'll see what we'll do. And then after that, I discovered the micros. You can trade, you can risk $100, you can risk less than $100, you can risk $200, $400, because you have a control here. So I went with full risk right here with a stop loss. So I'm doing nothing here until we reach the target. But on my account, this is the point. On my account, the combined challenge one, I did what? The combined account, I entered here as well as with the practice account. But with what? Look at the contract size. Because risk management. This contract size that you did, I used 2 lots here, as market moved down, because this was the objective that I was waiting for. Remember, I said as it moved, I wanted it at least to get the fair value gap that is at discounted area. And you will see ICT encourages this, guys. As price is moving low, I entered one contract right there. Then I would watch if we respect this invasion fair value gap. As price moves even high, respecting this, you would see me entering another one again, guys, right there. Why am I doing that? Is because this was dynamic risk. So I was feeling confident that we might go at least for closes, hanging fruit. So let's move on. As you can see, the price is moving here and here. As you can see, the close, well, as we come and respect this, you see me putting on the last two that I'm having, not one. Sorry for that. The last two that I'm having with me, you will see me putting it around somewhere there. As you can see me, this high, this was the confirmation for me. As market dipped back into this consequent encouragement of this, or we can say mean threshold, then you see me coming back in here. Plus we have the fair value gap. Then, but one other thing that the ICT likes to emphasize is that you guys need to reward yourself. Give yourself a reward. As you can see, the price was coming here. Just in case that the price is not willing to go my way, let me pull out something so that I don't lose the full risk. You see me pulling out something here. As price is coming to the consequent encouragement, you see me pulling something else also here. You cannot say that, guys, this is not the textbook ICT way of trading. Then I'm waiting for to pull here, to see if I can pull here or I can leave the market to go low. But even if, and you will see my stop loss. My stop loss is now here. So guys, let's go to the charts. First, I want us to go to 1 hour, so that I don't forget that. Those are the important things that you need to keep in your mind, guys. Those are the most important things that you need to keep in your mind. These little detail things, these minor details, they will haunt you if you're studying ICT, if you don't pay attention on them. You will be frustrated. You see what I'm talking about right here. You have the 25%, 50%, 75%. So sensitive areas, you cannot choose, guys, which sensitive area will suit you. Is the reason why, if it's the higher time frame area like this, I don't trade this area. I wait for market to give me the displacement on the lower time frames. So now, as you can see, we are on an average of around 150, 160 ticks. So I would say around, if 100 ticks is equals to, you divide that by 5, is equals to 20 handles. So we are around 30 handles to 40 handles. Let's just not talk about it and measure it. You see, we're around 40 handles right there. So if you are an ICT fan and you are listening to ICT and you are following whatever ICT is giving you, please, guys, 40 handles, that's too much. What are the frameworks for silver bullets? 20 handles. So if you get something like this, guys, know that that is too much. So let's see if, for the purpose of this video, we took this one and coming here. I do not expect the market to come here. I can just break even from here. why did I pull? Why do I pull this? Am I appetizing you on money? No. I said this. It's even though it's a trade of 8 with top step, but this is a practice, as you can see here, practice account. What top step does, they give you, when you purchase an account with them, they give you 2 types of accounts. They give you an account to practice on before you can just jump into the trades. And I feel and think that is a good thing to do. Before jumping into the trades, they give you practice account. Maybe you can practice first week or first few 3 days. Use practice accounts to take your few trades and see how you do with a practice account, because it's the same thing that as your combined account. So you see how you do with it. And then if you have challenges, unlike me, if you have challenges with maybe your stop loss, maybe not risking what you want to risk, and having challenges with picking up the lot sizes, use the practice account for that, because you are losing nothing for that. So let's move, guys. I'm doing this just to show you this is how far we could take it. Another thing, in fact, this is the story for another day, and this is a topic for another video, not for this one, because I want to apply another strategies on how to pass these things, and I want to do them live. So guys, you better subscribe, please. You better subscribe, guys. You better subscribe. I want to remove this because this is still 5 lot. I'm battling with so I do not expect it to go here. So I can now put my stop loss at break even. You can put a sell stop right here. Of 1 contract. Is it 1, 2? Oh, damn, I have 2 contracts. So let me take something out of here. I did not see, guys, that I have 2 contracts right here. Oh, let me do this instead. After taking out the liquidity, we have a fair value gap right here. So let me just take one right there. This is the bad way of scaling out, guys. You need to scale out as the candle is moving high. But I've just realized something. We have this fair value gap and we have market crossing. I just wanted to at least maybe put one here and let one run, see if it can get there. But anyway, we are losing nothing. If this kicks us out, guys, we will remain at 490, not 550. We will remain at 490. So if I were to manage this trade, say I stay in for this trade for that long, I would want to see how the price reacts off of this. When it starts to disrespect this and break this and leaves the fair value gap here, this is where, in fact, I should have never got out there. I should have just practiced that here. If the price breaks, it violates this, because this is the stop. This is the fair value gap that you expect to support price to go high. But if we disrespect this and we break the low, and the price keeps on coming back, comes back here at this area where we are as a fair value gap, and respect that fair value gap. I don't just lose hope like that on a trade for me to go out. And respect that fair value gap. What is it that I will do? I will do what? I will go out right at the spot, right there. Everything else will go out right there. In fact, I will do it if it does that. But if we respect this, I have no reason to go out. We respect that we have this, even if I would leave something but to this area. But you can see how below this other block right here, where is the fair value gap? The fair value gap is here. So we might respect this fair value gap, and the Mohawks, those things that you see spiking from the fair value gap, they might spike from the fair value gap because of these two candles right here. So I'm watching that happening right now. You see exactly what I'm talking about. If we see things doing this, if we see price doing this, now we start to lose hope here. Because it's more likely, and if you were following me, truly following me, you know, I talked about this recently now. If I see candles closing like this, I know it's more likely to fail or to consolidate. Sometimes it takes, but the probability is low. So don't fight the system. Your system, your backtesting, your trading plan says this kind of a fair value gap like this to do what? This kind of a fair value gap like this. It's more likely to consolidate or to be violated. Invasion fair value gap. Do not trade them. They are low probability. Do not trade them. Why would you want now to hope that they go high? Sorry, because your system doesn't allow that. So from here, if we give them my PD array, let me even put it right here. Let me put my stop right there. I might comment and not want to go out. So my PD array, my most PD array is this one. If it hits me right here and it bounces off of 50%, it's still fine. I'm still fine with it. But this one right here, you see this other block right here, I'm watching how price will react off of this other block, because we took out this buy side liquidity with the displacement high. So I want to see if the displacement high will hold. If not, the displacement low will come. Either way, you are going to lose the trade. So you would say to me, I would have gone out of this closest hanging fruit. This is the reason why it's important. And guys, if you subscribe, and maybe if I have 10,000 subs, I know it's a journey to take. But if I have 10,000 subs, I will try ICT model live. The one that he said, you do this for 90 days and you can quit your job. I will do it live. I'm not saying that I will quit my job, guys. I will do it live. Then I will report to you. Does it allow to quit your job or not? I'm not going to backtest it. I am going to trade it live with you. And then you will see if really what ICT is saying, you can really quit your job. And then I will start to compare the returns. And hypothetically, I need even to deposit that. This doesn't even need a funded account, proprietary firm. No, this needs personal account. And I'm set the amount that if you save a certain amount, maybe $1,000, like, and then try to trade this kind of a strategy with risk to reward that is suitable. Then see if for real, if you can catch this closest hanging fruit for 90 days, of which, and I'm not going to say it's 90 days, 3 months. It will, for me, it will be 90 days of trading. I'll put that there. Then I will do that live. So if you want to see that happening, guys, please be the part of change. Subscribe, like, and share. The best way to see it happening is to share. If you share this, many people will come into this, and eventually I'll be held liable to perform that thing. And then you will judge me publicly if what I'm doing is a crap or is it for real. And if what ICT said, and if we are doing that, remember every week every month, I mean to say, we have the month trade. So we'll see how the algorithm performed and how we performed on the algorithm, and see if for real can you quit your job after 90 days. So I'm just watching this before closing the video, guys. See me taking time here. This I talked about, guys. I talked about this. So now what happens is that 2 ways to manage risk. I will wait for the close and then wait for price to see here. As price respect here, I will at least close closer to where I've first closed my positions. You get what I'm saying, guys? Or I will let it hit the stop loss. This is the insurance I'm willing to pay for the trade that I'm in. But most of the positions were taken out here. You can see the buy position was taken out here. Let's see if guys, this is the reason why I do not you don't get the vocals on my, let's remove this. This is the reason why you don't get vocals on my live trades, because sometimes I get caught up on certain things. You see, this was the buy here with 5 contracts. As we go here, took 4 out here after seeing this one right here, and then after taking another one right here, as I am suspecting this to be the London, to be the pre-New York silver bullet, the 7 a.m. silver bullet. So these are the reasons why I'm saying what I'm saying. So the risk management, you don't have to be scared. At this point, we do not have to be scared. $40, so we have $40 from here to here. It's $25. So we'll go out around with $20. It doesn't matter, guys. So the risk management, now it's you against the system. I wish I do another clip. I cut this one and I do a lesson on this with the live market. Now it's you against the system. Some of you might want to go out right here. As it moves, say, I have protected my risk. I know the saying, it goes out there, say, the winners cut their losses short. This is the meaning of that, guys. Cut their losses short and let their winners run. I'm still in profit right here. So the only way that I will cut my loss short here, this is still my winner, even though I'm on a drawdown. I'm letting it run, but in order for me to cut this thing short, follow ICT, follow the rules, follow the logic, follow everything. If this is going to happen, now I'm changing the narrative. I have a breaker right here. You see, I have a fair value gap right here. As price is coming to this fair value gap right here, this is where I'm gonna go out, and I'm watching close. I'm watching closely to the close. I'm watching the close. I mean to say the close of the candles. If it close above, I'm still fighting. I leave the position. I might. This is what I might do. If it close above, I might want to see some sort of a displacement and look if ever is there any some form of an entry point that I could have used if I was scaling in, and if I could have used that entry, where would my stop loss be on that entry? I'm not saying I'm entering. If there is an entry and my stop loss could have been at the low, I'm taking the stop loss. I place the stop loss according to the entry, that the new entry there. That's how I will cut my loss short. So guys, this is 2024. Let's do things differently. So now we are waiting for stop loss to be hit or for us to trail our stop loss. That's what we are waiting for. I hope you guys enjoy the wait. Okay, guys, welcome back. Sorry for that, guys. I did not plug my Wi-Fi router. As you can see from the video there, you will see down here, I did not have a connection. That's why we were kicked out from Cashflow. By the way, guys, I hope you enjoyed that one. Let's come and enjoy the second fruits right here. As you can see, with my live account, I just took out my last position here. So how did that occur? Like I've shown you before, I found the one here as it tested this, but I went back here with one, back there with two. I took something out here, took one here, then I finally took one here. I wanted to take it here as I was getting ready, plugging the Wi-Fi router there. So this was the expectations. Like I said, I was going to, previously we were talking about cutting my losses short. You could see my stop loss was somewhere around here, and as price it was here, and I claimed that the cutting the loss short is when the price at least gets here and respect this. But if it disrespects this, that means price is saying something else to you. I am not going to wait for price to say something else to me with this trade. For me, this trade, if I have to follow the system, you can see there's no way that you can get a sniper entry than this one. You can see I got it here, unless if you're going to get it 2 ticks before me. But anyway, you will be the best though. So for me, this entry, the entry that I was waiting for, I was able to get at least 200 ticks to participate, to be the participant of 200 ticks inside of this trade. And if it lives here or it lives there, we don't know. But let me get you into there's an account, the practice account that I did not go out with here. This one is the one with the combined. This is the combined challenge. I took one here, then as I moved there. So guys, let me see you on the other one, and then let me close the video. Okay guys, we back. What we are looking at this moment is that I will take my stop loss. I can see the smooth relative equal lows right here, of which I do not want to see them happening. So right below right here, this is where I'll put my stop loss. Even if I am taken out at that point, it is still fine. I guess it will be still under 500. I will move from this for something, I guess. Let's see. This is $25 from this. Yeah, it will still be under 500 and something. So for me, this is still fine, still trade. I will update you if the trade still doesn't hit the stop loss. But if it does hit the stop loss, I might even update you with the picture right there of what happened. So guys, everything is transparent. We share everything. I hope you enjoyed this, and if you did, and if you see value here, guys, this is trading. You saw me analyzing this before I got in, what I was expecting, how I was expecting it. Go to NFP. You saw me calling out NFP before, and this is not the first time, this is not the second time, this is not the third time. This goes with the practice, guys. All these years when I was trading NFP and NFP using to do this to me, this is how far I could come with the strategy on. And I would see that the NFP has this way of trading in and out. If you can go to my Instagram there, I've linked my Instagram with this channel. If you go to my Instagram, and there are years, maybe 2021, you will see my trades there. I post everything there. You will see my trades. There's a trade of NFP there. I guess I did something like $400 and something there. You would see that trades. There are 3 trades. There's one trade that failed, and then there are 2 trades that I got there. It is still the NFP. It was the discovery of NFP then. So you focus on such things, and then you start to focus on the growth. So without ICT, yes, ICT played a very, very huge role, significant role when it, especially when it comes to events and everything. And I'll also like to give credit to I Market Life. Is it I Market Life? Yes, I Market Life. I would like to give credit to them because when I started to Smart Money, they are the ones who introduced me to Wake Off. So before I could see ICT, and then during the conversations there, I knew back then that the news were excuse in the market. So people, if you see a person going in and out in the during the news 3 minutes before telling you that it's a buy, it's a sell, guys, like you, those people, they do not know where the market will go. That it's a guesswork. And you can come to me and say they got it right. So what if they got it right, and then this person gets it right 60%, 70% of the time? That doesn't matter, guys. If I can put that person here on the chart and say this is what is happening, come and do it the second time, do it the third time, you will see in most cases there are things that they will slip them because this thing is booked by the algorithm. I can see, I also see even better than many out there that the release of an NFP will go down. I've called it there yesterday in front of everyone. You can see the market is not replayed. It was live there. Saying this, I expect this, of course, to go low because I want the market price to go high. Unfortunately, when I left, like now, when I'm saying I'm leaving now, when I left this, then what happened is that the 5 minutes time frame fair value gap, it entered like this, and I was expecting the lower fair value gap to be filled, but it got in off of the first fair value gap, then it went high. The move was correct. Because I was correct, I caught it somewhere around here. This is the kind of a trade that I got during NFP. I caught it here because I knew that the price was going high. And you can see me, if this was the target, I went out here because of certain things that I saw on the market. And immediately after going out, then you saw the market pulling down. And this is the area where the market pulled down. This is the area I'm talking about. We are showing the, okay, it doesn't, oh, it's on my, not on the practice account. It's strictly not on my practice account. It's strictly on my account where I'm showing you guys and how to do those things. I would have shown you here. It's the exit, my exit. And there's a video there, guys. There's a video there. There's my exit. And see, after I've exited the market, this is what happened. So you could have been a loser if you waited for price to hit your TP. Just like right now, you might wait for price to do this, but it's no news trading day. You might see price pulling and going down. But this, I'm not losing the fact that this is my bias, guys. So without wasting any time, guys, this is your host KRO. See you on the next video. Please